This is one of the problems with the financial markets as well that we need to keep in mind, is that we get used to data. Back in March, April, we were seeing 6 million people get laid off every week, right? Huge number. Now it's only 1 million, right? So things are obviously getting better. The highest number on record going back in history to when we started tracking the number of people getting laid off each week was 687,000. We're 1.5 times that on a weekly basis now. So, but we've seen it for so long. We've seen it for so many weeks now. It's like, oh, it's 1 million. It's 1 million people a week losing their job. Yeah, no, but Lance, the continuing claims number is going down. Well, yeah, because after 26 weeks, you no longer can claim unemployment benefits. So if you don't have a job, you simply fall off the rolls entirely. So you're no longer an initial claimant, and you're no longer on continuing claims. So that number naturally goes down. And look, the number of people filing for unemployment for the first time, it will naturally go down. Theoretically, unemployment claims could go to 0 on a weekly basis because you simply run out of people to fire. Looking at margin debt, there's what we call free credit balances, free cash balances. So for instance, if you have $100,000 in an investment account and your margin line is 50% of your account. In other words, you can have $100,000 and you can buy another $50,000 worth of stock on margin. So you can borrow money to leverage up your portfolio to get even more exposure. So that's what margin is. The problem with margin, of course, is when things go wrong. When the price of your account falls far enough, you then have to start liquidating to cover your margin debt because you can only have up to 50% or whatever the margin limit is for your particular brokerage firm. And depending on what assets you have in your account, you can only borrow so much money. So if the value of your account falls, you then have to liquidate to keep that margin line within the context of your overall balance. So what happens during a decline in the market where you have a substantial decline is you start getting phone calls from your broker every day saying, hey, you need to sell more, you need to sell more, you need to sell more. And you're forced into a liquidation cycle to continue to cover reduced margin levels. And this is where the problems with margin's great on the way up, right? It helps you and it helps the market. As long as markets are rising, margin debt's great because it helps fuel the rise by providing more buying power. But on the way down, when margin calls start, bad things happen. So Roth IRA conversions, we've been getting, and again, I know everybody's like, oh, I know, just, it's important though.
Hey, no, this is a big topic, Lance.
I know, but it's, you know, people are like, oh my gosh, so boring. Let's talk about stocks. Let's talk about Zoom being up, 60% yesterday. That's what we want to talk about. Look, we've been getting a lot of questions on this lately, and the reason it's worth talking about is because you can get yourself into trouble really quick on Roth IRA conversions. And there's a lot of implications for doing it. It sounds like a pretty neat deal. It's like I just, I take some money in my IRA, I pay some tax on it, I stick it into a Roth IRA, it grows tax-free. One caveat to all this, Roth IRAs were an invention that came out prior to 2008, and we weren't running a $4 trillion deficit back then. Economic growth was reasonably strong. Things were, kind of more normalized within the economy. One of the things that you need to at least be thinking about, and when you do these Roth IRA conversions, there is a potential. And again, you don't know what's going to happen. And as we talked about before here, this is likely going to be one of the last elections where we have an electoral college. If the movement does pick up steam after this election to get rid of the electoral college and everything is on basically a one person, one vote type idea, then only major cities will elect presidents. Those will all be Democratic. And there is going to be a demand for higher taxes down the road. And an easy place to go get a lot of tax money is to make Roth IRAs taxable. So I'm not saying that's going to happen. I'm just saying you've got to think about these things down the road. Tax laws can change and tax structures can change. And when you're running a $4 to $5 to $6 to $7 trillion deficit, which we will be at the current run rate, you've got to start thinking about where taxes are going to come from down the road. And again, so these are just all parts and parcel of the consideration, but setting that aside for a moment, right now, converting to a Roth IRA is tax advantageous because taxes are going up. If Joe Biden wins the election, taxes are going up. Taxes are going to go up anyway at some point, simply because we got to pay for all this stuff. Somewhere, somehow, taxes are going up. So the question is when should you do a Roth IRA conversion? How should you do it? And what can you do to kind of get yourself into trouble?
So hold on real quick. First, I want to go back just a tad bit.
Okay.
Now you're gaslighting just a tad.
I'm not gaslighting. I'm just trying. Look. There's already been talk about converting 401k plans as well. So there's already been discussions of that.
Well, yes. No, there've been big discussions. In fact, Biden's talked about that very specifically on how you can contribute actually having a government match instead of an employer match. That's a whole nother topic. But I don't think that anybody's going to come in and say, hey, guys, they're going to tap you on your shoulder and say, by the way, you already pay taxes on these funds. We're going to tax you again. They're just going to stop. They're going to stop the demand and stop the ability to do so.
Whenever we get to very exuberant markets, we start opening up, areas of the markets that we shouldn't do investors. Retail investors jump in here with a big chunk of their life savings. And then, of course, the eventual inevitable crash comes and they lose a big chunk of it. And then we come out with regulations and say, well, we should have never allowed that to happen, so we won't allow that. You never should have allowed it to happen to begin with. But this is the history of the markets. We create in these bubbles and we allow banks and Wall Street and brokerage firms and all these others to take advantage of retail investors. And then when everything goes bad, nobody wants to accept responsibility for their actions. And then we all want to blame somebody else for our losses. And then we come up with rules and regulations as to why we shouldn't have allowed that to happen in the first place. But we knew we shouldn't have had let it happen in the first place to begin with.
There's another new one out there, which I just saw a day or two ago, and it's 3-time levered individual stocks. So there's an ETF that'll be 3 times Tesla. So if Tesla goes up 10%, you're up 30%. If it goes down 10%, you're down 30%. And that's all it does. It's 3 times levered one stock. Right now, Tesla is down 10% this morning. That means if you bought that ETF yesterday, you're down 30%. If Tesla's down 30 or 30%, your ETF goes to zero.
And then after this happens, we'll all come out and go, well, we shouldn't have allowed that to happen, so we'll restrict 3 times leveraged ETFs on the individual stocks, right?
Right.
But we have to allow people to lose a heck of a lot of money before we get rid of the stupidity. So my daughter's about to turn 14 at the end of the month, right? So
she is?
She'll be 14 years old, man, at the end of at September the 22nd.
Wow.
So now it's getting much more difficult. It was easy for her birthday when she was young to buy her stuff. Now it's just getting all really expensive.
Hold on.
Exactly. But, she's our last one. She's getting into that teenage year thing.
Oh, yeah.
Right? Where, she used to hang out with us. Now she stays in her room all the time, kind of locked up.
Her apartment.
Exactly. I have renters in my house, so
who do not pay rent.
Exactly. This is all stuff that the Russell gets to look forward to, by the way. I'm just,
Russell.
I tell these stories just to prepare Russell for what's coming, right? Yeah. So just so he knows. He's over there shaking his head like, nope, not in my household.
Oh, yeah.
That's what I said, too. I said, that'll never happen in my house. Yeah, well.
Hide and watch.
Especially now, I'm outnumbered. So, my oldest son left for Germany. My younger son, he's in the house, but he plays. He made varsity football his junior year, so he's very excited. Yeah. And so he's never home. He's always out practicing, at the gym, working out, whatever.
So he's worn out by the time he gets home.
Yeah, I don't see him much, right? Because he's always on the move. So I'm surrounded by women all the time. So it's just my wife and my 2 daughters. And this. So.
You're the most popular guy in the house, and that's not a good thing.
Exactly. Anyway.